Good morning, everyone. It is Thursday, November 13th. I got all excited last night, had all my CPI trades planned out. I come in on CPI days and do a little online gambling, guessing directions, using derivatives, what any 72-year-old degen should be doing. But anyway, so I had all my trades set up and I'm sitting here. 8:30 hits, nothing, nothing, nothing. Cancel all my trades, and now I find out there's no CPI. How disappointing. It's like they cancel Christmas or something. Um, Life is just so unfair. But anyway, good morning. Who's in here? Not too many yet. Let's see here. Who's in here? Morg. Morg is the only one in here. Morg, good morning. Uh, I hate it when this happens. I swear I was so excited. Hey, Morg, are you there? Uh, Heads up here. The NQ is in this. I don't know if you trade the Nasdaq or any of its derivatives, but if you do, the NQ is right at this extremely uh, extreme 3-day balance area. And frankly, I'm shocked that this thing hasn't moved yet. But that's going to be, I think, a trade. If you're trading stock index futures, and in particular, if you trade the NQs, you want to be paying attention to. You can trade it with the SQQQ is the leverage ETF. You can trade it with that. You can trade it with futures. You can trade with options. But that's and I talked about this delta neutral idea. You could do it right now and get an even better price than we had at the close yesterday. So that's a trade. I think if you're trading this stuff, you almost have to consider it. Again, I don't give trading advice, but just for informational, educational, entertainment purposes. Okay, it's 9:10 a.m. Eastern time. I got to tell you guys, I'm a little bit disappointed in this crowd, except for Morg. Morg gets a star. Morg was in here early with me for the non-release of the CPI report. Now I'm going to repeat something that I told Morg uh, that you guys missed. First of all, first and foremost, we are breaking to the downside out of a balance area in the NQ. Now, this trade, this could be a very, very significant trade. We had the Dow going to a new all-time high, going straight up for 4 days with the NQ for 3 days in a mature balance area. It's bizarre. So anyway, in the NQ right now, you're making lower lows and lower highs. We're breaking to the downside of a balance area. You're either short or you're flat. You're not. You absolutely. There are a lot of things I don't say without equivocation because that's the way trading is. But I can say without equivocation, you don't want to be trying to buy this, at least right now, based on information at hand. And there's a lot of information that says not to buy it. Okay, all that said. So this is a true confession moment for you guys. I get, once a month we have CPI that comes out. There are several government reports at 8:30 and the market just goes absolutely ape shit one way or the other. And it's a perfect opportunity for people that are gamblers that like to gamble, like me, to do gambling things. And so I come in this morning, get all my trades set up for the big move. I'm sitting here, 8:30 rolls around, market sits, sits, sits. What the hell? Well, I closed out, I erased all my orders and canceled all my orders and find out that an hour or two ago they decided they're not releasing it. So I'm so disappointed that my gambling trade of the month got canceled because of this government stuff. So disappointing. Anyway, uh, we do have this significant thing right now is the breakdown out of this balance area. I keep talking about that, but it merits being talked about. Uh, and that's what will it's already forming an initiative move down. And if a lot of times these breaks are quite significant. And again, we had the even if we're in this ripping bull market, which we are in, which we're still in, by the way, you had the YM up just what was that 4+% in 4 days. So that's where we are as we head into the cash open. We'll see what happens. Okay, back to the upside now. 6860 is going to be a level to keep an eye on the basis the ES. Uh, I'd be favoring short trades. We're breaking to the downside out of this balance area in the NQ. It's been the market that has driven this thing, especially since the April low, but really this entire bull trend has been driven by the NDX. Now, we are coming off of an incredible ramp in the Dow. I don't know which one of the or which components in the Dow drove that, but I'm sure it was one or two, maybe Microsoft. I don't know. But that was, 4% plus in 4 days straight up with the NDX in a balance area. It's just another bizarre chapter in this bull run since the April low. So that was due for a pause on top of the fact that now we're breaking to the downside out of this balance area. So I think you got to be favoring shorts, guys. I don't come in and I feel pretty strongly about that. At the moment, we're making lower lows, lower highs, we're breaking downside out of the balance area. We're stretched to the upside in the Dow. So, you don't want to be cavalier about it with your trading. Follow your trade plan. But there's nothing right now based on information at hand that suggests looking for long trades. Okay, it's 9:42, and this thing is heading straight down. You got to be short or flat. You're not trying to buy this. In a minute, we'll take a look at potential targets to the downside. I'm in the middle of managing some positions, so I'll be back ASAP. Okay, the what I have found to be a high probability trade when you are in a waterfall decline like this is inevitable that we get so compressed to the downside that you get this bungee jump back to or right at that faster moving average. That is a high probability trade to take that short. So now we may not, sometimes we can go for hours without getting back to it. But if you get close to it, that and in a trend like this, you shouldn't see this thing above that level by much or for long. But that's a great place if you're not in this to take a shot and get a little piece of this. Okay, guys, this is that was a big bounce, and we're having a drop into the range. So, I wouldn't trade be favoring longs in here, but if you're short, you got to be careful about being too greedy because, you know, that was a big bounce. We could have a low in place now. You don't know, but the structure has gone from unequivocally waterfall decline into another phase. Now, we may continue down lower all day long, but you have to be careful because it did come up into this faster moving average. Let me move over here. I think I'm about out of everything. Hold on, let me adjust some stuff here, make sure I'm not going to get destroyed while I'm talking. Okay. All right, let's take a look. All right. So we came up into this, flirted around with it. Now, a lot of times what you'll do is like this, where you'll go straight down. To me, and I was fortunate because this is what I was looking for. I mean, I was pretty pound on the table last night and early this morning about this breakout of this balance area. So I've been aggressively short. Uh, and I've covered some back and forth, blah, blah, blah. So this was sort of an interesting area. I did get short, I had covered some shorts, put them back on, covered, etc. That's how I trade, especially when I'm scalping this stuff. So now we have this volume node. This volume node is going to be important. Okay. So the market has defined now the level that's important, and it's right here. You don't need special software, orbs, planetarium type stuff. It's right here. Here, here. So, oops, if we get above here, uh, if we get above this area in here, uh, you probably don't want to be short. But unless we get above this area, you got to be favoring short trades. Now that's a general guideline. How you trade, if you're comfortable scalping this thing from the long side with some special setup you have, that's great. I'm just telling you that the potential for this trade is in this particular instance because of again, it's because of market condition. Market condition will drive my strategy and my tactics. So this is a trade that could just be beginning. And my reality check is as long as it's below this level. Now, if it gets above this level, it sort of brings into question my thought about being extremely aggressive and this being an extremely bearish day. Okay. Uh, so we've blown through my level, and the next level is not far above, right here. Now, this level is still important, but it's important to the downside. Okay, I'm back again. It's 10:11 by the way. So let me walk you through what just happened and how I read it and why I read it the way I read it. Okay, this was a waterfall decline. And you're going to get some sort of bounce eventually. You're going to. You always do. Sometimes, and when you get that bounce, okay, in a situation like this, it's going to help you define what's going on and what's likely to happen next. So when we spiked up through this level, I was shorting it here. But then when we came back down here, I started covering my shorts and I got flat. And the reason I got flat is because of this very thing here. I wanted to see if the market could hold this level and what would happen. It's a long day. It's only 10:12. There's only 10 o'clock when we were in here. So this was a logical error because this was so deep. This had the potential to stop and at least test this level. And this level was important. And it is important. It's important now to the downside. So that was my rationale. Now, did I buy it here? No, I didn't buy it here because I think the trend is down. We're breaking out of this balance area. This thing can take numerous paths before it really breaks again or not. Um, now we're this thing is picking up steam here, which is interesting. This is an important level. We're above this moving average. So if I were short here, I would not be liking this at all. So right now, from a day trade perspective, I'm neutral. Also, just FYI, by the way, it's okay. It's 10:14. I took off the short leg of my delta neutral trade um, at basically what would be break even for the trade. So I have the long side on uh, just as a flyer. So worst case, I'll break even on that trade. And if this thing is going to do one of these magical, you know, hockey stick save reversals, then hey, awesome. Morg. Yeah. Yep. Yep. Uh, you got to have a sense of humor, Morg. Okay, let's look at some stuff here. All right. Now we've traded back through this level and we are going to test these lows. Let's look at a bigger picture and see if there's something there that we don't want to be missing. Okay, let me get my dog out of my lap here for a minute. Let's see. You didn't like that. I have the world's most spoiled animal. Okay, hold on. All right, see, here's the breakout of this balance area, and there's a gap there. Now, and here is the YM Dow. So you can see now. Again, we're in a historic uptrend. This market has been incredibly bid. Now, from a market structure perspective, this is a heads up. I mean, a 4 or 5% decline is once in a while that used to happen, and it used to last more than 3 hours. We have not had that since the April low, really. No, I don't think we've had a 4 or 5% decline in the ES since the SPX since the April low. Maybe briefly in the NDX. So something like that is overdue, and it would not in itself invalidate the larger degree trend. As a matter of fact, it's normal. Now, all of that said, again, this gets back to context. The potential for this trade, if indeed this isn't just a 2 hour wonder decline, we're going to go ripping higher. There's incredible potential, downside potential for this trade. When I say incredible potential, when you're dealing with derivatives and leverage stuff, 2-3%, that's a big move. So, and you can also see the Russell here. You can see that level in the Russell, that ledge that we spiked through and then bungee jumped higher. Couldn't get any higher. Now we're heading lower. Now, today's cash session range is not that big. It can get a whole lot bigger. So, what this is for me, it's a reality check to say, okay, do I want to be trying to be cute and buy these new lows? Probably not. The better part of valor here is even if these lows hold and we get some bungee jump, is to continue to be aggressive on the short side until proven wrong. Okay, guys, this thing continues to crater. Not a huge surprise based on the potential coming out of this balance area. So, uh, you know, just if you're short, let it run. There's no reason to be looking for long trades in here. None whatsoever at this point. Zero. Okay. If you're in a trade, turn your sound off so I don't interfere with it. Okay. I record this. I post it in the members area so you can review it at night. But there are a couple of things that today is a incredible illustration of. And, I've said this a lot. I am not a market profile trader. I don't care about a charting format. What I care about is the auction process and understanding it, how markets develop. And I try to analyze markets probabilistically using charts. I use bar charts and I use a market profile chart. If you're using candles, that's great. Most people now use candles. I started trading in front of a screen before candlestick charts were a thing. But I can see the same thing on a bar chart that anybody else that uses candles can see. That's another topic. I don't want to get too far off of the point I'm trying to make. Now, because I'm a market condition trader, there are times where you can identify when a trend is more likely to extend than not. And one of those times is when you're coming out of a balance area, when the market is balanced, and then you have an initiative move because and this is an auction market precept and it's infallible. If you can prove me wrong, by all means do so. But when you're in a balance area, you're looking for the sharp move. And when you break the extreme of that balance area, you don't want to be fading the market. Now, are there times where there's a false breakout? Yes, but you can see that very quickly through price action. If you break below or above a balance area extreme and it doesn't continue almost immediately and it starts trading sharply back into the range, that itself is a great auction market trade to go in the other direction. But anyway, I digress. When you're trading and you have a move like we're having now, there is a large trading contingent out there in YouTube land and broette trading land that regression trade. They dollar cost average, and what they'll do, they have there's sort of a formula for it, okay? And they'll use VWAP, volume weighted average price. George, you may be familiar with this concept. And that I want to explore this volume weighted average price thing. It seems to have some validity to what we're doing because it's an auction market derived thing. I don't use it, but I do think it does have validity. But that's another story. But anyway, so this contingent of people, what they will do when there is a 3 standard deviation move away from volume weighted average price, whether it's up or it's down, they'll start fading the move. And what they'll do, they'll dollar cost average. They'll average in and then they'll take a quick profit. And then they'll average in and take a quick profit. Well, there's some statistic, and I haven't run the numbers myself, that 80% of the time you don't spend X amount of time or range outside of a 3rd standard deviation band away from VWAP. Okay. That's fine. And I'm sure that's true. I'm a big believer in math. There's not enough math in the world. However, if you're a trader, context is everything. And to me, do I fade moves? Yeah, occasionally I will. I absolutely will in certain circumstances. Okay. But I don't just come in every day waiting to see if I can get a market that's at 3 standard deviations away from VWAP and start fading it. Because guess what? It's also math that 20% of the time that market's not going to stop, or it's going to be an extraordinarily uncomfortable day where whether or not I break even or make money depends on 2 things: trading facility and primarily luck. So when there's a move like we're having now, I would rather fade the rallies judiciously because the trend is down until we start making higher highs and higher lows. We start trading above these moving averages. So, and if you trade the other way, you're never going to have the big gain. Never, because you're always fading and you're always taking quick profits. And so if you are fading something that's at the 3rd standard deviation and it reverses for real, guess what? Okay, great. You've made a small profit, but you've missed a 200 handle move in the NQ. Now, to each his own. That style of trading will work, but that style of trading doesn't take any less skill than what we're doing. I see it positive all the time as, oh, look, why sweat out trying to do this or that or the other? Just fade stuff at 3rd standard deviation. It's easy. Well, it's not. It's no easier than this. And you're ignoring market condition, and you're taking all you're trading is a square peg. And if the market happens to be a round hole that day, you get hammered. So that it's fascinating to me. This trading thing now has the short-term trading, the scalping stuff because of these prop shops has absolutely exploded. And I am not anti-prop shop anymore. I once was. I mean, it's in my book. You guys have seen it. But the game has changed because there's so many of them now. They've loosened the rules and it has made it more, what's the right word? Realistic, more plausible to be able to take them up on their offer. Now, it works for the prop shots because there's so many absolute total gambling idiots out there that are completely mathematically enumerate. But we're not, right? Now, again, I'm not saying anything is easy. What I'm talking about doing, trading against these moving averages, higher highs, higher lows. That's very simple, but that's not easy either. And I understand that. But it is also very mathematically sound, and it will enable you to occasionally luck into that outsized move. And then, it comes down to money management, trade management, et cetera. And I want to get deeper into all that stuff as we go on. But today is a wonderful lesson in a number of different principles that I try to follow and that I try to offer to you guys to follow. Hey, George, are you there? George Fee? Maybe not. I'll try later. George, I know, uses VWAP, and I want to get his input on how what his experience is because he also has been a long time student, client, fellow trader of what we're doing. Okay, guys, this is interesting. Ron has typed into the chat. He has shared that, excuse me, he has shared, come here, my dog is ready to play. He has shared that he used VWAP. Now, for those of you that may or may not know, Ron has been trading a long, long, long time. I've been trading 40 years. Ron may be somebody that's been trading as long as I have. Very experienced trader, is intimately familiar with all the stuff. I mean, all the nonsense that's out there. Ron is well aware of it and probably an expert in it, just like I am, and chooses not to use it. Now, Ron's comment is really interesting. I asked him, "What was your experience? Why did you stop?" Ron says, "I try to limit my inputs." I can't think of anything. That's a very profound thing. And it sort of speaks to what I'm always talking about here. You've got the entire trading world out there looking for the latest and greatest indicator. There's no shortage of them. There are entire platforms that are built around indicators. Everybody wants an indicator. Tell me what the market's going to do. Just give me an indicator. And I've always said what indicators do is indicate that you don't understand how the market works. Because all an indicator can possibly do is take inputs from price action itself and paste a line on a chart. So why not just understand that price action yourself? Now, this is my thought process. Now, that said, I don't want to be dogmatic. And if there's something out there that I'm missing, I want to understand it. And I understand VWAP. It's a very, very, very simple concept. But to me, it's almost self-evident. And it's only going to work when you have a regressive market. Now, granted, the market tends to be regressive over time and to a point. But when a market is trending like it is now and you have institutional participation and conviction, VWAP is going to go down all day long until it doesn't. Now, getting back to what I choose to use, which is really simple, I just use moving averages. And if moving averages are sloping lower, we're trading below the moving averages, and the pivot pattern, i.e., lower lows, lower highs, higher lows, is in effect. I, I, I can't think of anything that is any more consistent or objective than that. If I have to put something on my screen and sit here and cogitate over the various interpretations of how to use it, I don't find it particularly useful. Now, that's my personal thought about it. And I am wide open to being proven wrong and being shown something that could be really, really helpful. So, and if you're using something that works for you, don't let me talk you out of it. I mean, I'm just sharing my thoughts, and I'm more than willing to give a forum to somebody else that has has something that they think would be helpful. Okay, it's 11, excuse me, it's 11:12. Speaking of context, the SPX is right at the low of what's the day? Today is Thursday. This month, so this was Wednesday, Tuesday, Monday's low. Now Monday was the monster gap up, hardly retraced after the cash market opened, just briefly. We're right at that ledge. So that ledge, you're right at the edge of a balance area. I mean, not a balance area, a gap to the downside that extends to just to close that gap, not even to get below it. You're looking at another 0.6% down. That's a big move. Um, Here, let me show you. So, we came within a fraction, less than 1% of a new all-time high yesterday. Now we've gapped down, and here we are right on the edge of the abyss. Now let's go to the NDX. Now, because I have 17 different charting programs, I don't pay for real-time data here, but you're about to close the gap here. Oops. In the NDX. So you're coming up on an interesting level in the NDX. This is actually 3-day balance. This is from the other day. And you can see the divergence between, and then let's look at the Dow. So, the Dow had this incredible move, almost 4.25% higher, 4+% higher without a blip. Now it's going to be leaving a selling tail. So interesting dynamic right now among and between the indices, and it's important. It's information that very few people out there in bro trading land use. They can't see past the end of their nose because they're buried in a 500 tick chart in the NQ. Now, there's nothing wrong with trading a 500 tick chart in the NQ, but you can really help yourself if you can add a little context and perspective to things. Okay, look at this. This is interesting too. VIX. VIX isn't even 20 yet. Amazing. So my the point of that is that there's nothing extreme about what's going on so far today yet. It's not like there's some sort of outsized decline or technical stuff like VIX that would suggest not to be continuing to favor short trades. Now let's look at this, which is fairly worthless. Yeah, there's nothing here. We'll see. This has been a view for those of you that are seeing this for the first time. The red is 10-period moving average of NYSE advancing issues. Green is a 5-period. The histogram is breadth. Now, in bull trends, this is not helpful. And I've talked about that extensively in the past. In bear trends, it can be extremely helpful. In either trend, it's always more helpful in identifying lows than it is identifying highs. And right now, it's not. I mean, this is a massive divergence, but that we've had a scallion massive divergences. I think I put this in the report this past weekend too. You can see it did, and again, this was at a low. When we've come down into this area, you've been close to a short-term low every time since the April low. So it did work here, but in terms of identifying a high, no. And is this extreme? By no stretch of the imagination, but it's all relative, and trends tend to have a personality. That's true across all degrees of time. Now, if we were to have that 4 or 5% decline and we got down here, then I would be paying attention to this. But right now, not so much. Okay, guys. See my mic, and I've been recording. Hope you enjoyed the recording of my dog barking. That will be edited out, by the way. Apologies. Let me. All right, here we are. Now, this is something else that I've mentioned that I think is extremely helpful, particularly when you get extended into a trend. Here we go. All right, here are the 5-minute charts, the cash charts of the 4 primary indices that we trade. These are the cash charts: SPX, NDX, Dow, and Russell. And we've been in lockstep, and we are at lockstep. Now, at turns intraday, you'll almost always have divergences among and between these indices. And if you're trading the SPX and NDX, this is, to me, is an invaluable view. You can use this perspective in a number of different ways. I mean, you can't rote trade it just because there's a divergence here at this point in time didn't necessarily mean that the NDX was just lagging a little bit and wouldn't crater, but it's a heads up. And then you also had the Dow not going to a new low, and you had the Russell not going to a new low. So the only one that went to a new low in this instance was the SPX. So as far as indicators and all that type of stuff, I would rather, to speak to Ron's comment, which I think is succinct and perfect, I try to limit my inputs. Well, if you're going to have an input, if you're going to focus on something, and we can only focus on so much. I mean, if you're day trading, you have to be able to make a decision within, I mean, you have a minute maybe, but at the point of execution, you have a second or two. So if you're going to use your valuable finite attention, then you only have so much attention to look at so many things to make a decision. This is worthy of consideration. See this rate of change all day long, but it's out of my depth to be able to pick the low prior to the inevitable face ripping rally that will occur at some point today. But it might occur from 40 handles lower. Okay, this thing is hyper choppy, super compressed down here. It's going to absolutely explode one way or the other. This is high risk condition because it's so compressed. The trend is down, but it's compressed. There's a real battle going on here. So if we're putting in some sort of short-term low, this thing is going to scream higher. Now, we're also on the edge of the abyss here in terms of where this market is to the downside. So it could also put in another waterfall 5 minute, 10 minute, 15 minute decline. So just be aware of what you're trading. Okay, this thing is whipping to the upside in a very two-sided manner. Now, the Russell is just screaming higher. Now, we all know it can be its own animal. Uh, we did have divergences at that low on the 5 minute cash charts if you were watching. Now, the move off of that low has been a complete chop fest. We're above the moving averages. We're making higher highs and higher lows on the very short term time frames. This thing is super compressed. I still think we're going to get some sort of explosive move one way or the other here. But there is the potential for this thing to have put in the low prior to some sort of attempt at a significant rally. So just be aware of that. Okay, this thing is relentlessly lower, as you guys can see, and this is this is a market condition that was rejected by that balance area in the NDX. And now, is it going to go down at this rate of change all day? No. The Russell, by the way, which was showing some relative strength, absolutely is getting destroyed. It's taken out that ledge on the daily chart. So, this thing is whippy. It's compressed as it can possibly get in both directions. So just be really, really careful. Probably coming, by the way, it's 125, probably coming into capitulation type territory here. This is, a complete downside, throw in the towel, get me out, panic, decline at the moment. So if you're short, enjoy it, tighten your stops up, uh, but it's getting extended by anybody's measure. I'm not saying go long. I'm just saying if you are short, this looks like we're approaching some sort of short-term capitulation. Okay, it's 151. I had a problem with Zoom or my internet connection or something, but I'm back. And we continue to trade lower with the market. Now it's sort of balancing choppy again, but the trend has been relentless all day. It's only 150. So there's a lot of trade to be had here. The downside is extraordinarily compressed. I mean, extraordinarily so. Uh, but if you're buying this thing here, you really better know what you're doing, and you better have a good reason. You have to use stops, use the low extremes. Now, pressing the short side it becomes increasingly risky as well because you're almost 1 to 1. I mean, the thing is, we're in sort of a waterfall decline mode, and the deeper we go, the more compressed we get, the higher the probability of that face ripping rally that's going to show up. Now, it might not show up until 10 minutes until 4, but it could show up at any time because we're so compressed. Sam, are you there? Sam? Okay. Okay. Hey, well, you made the comment. You said the market will rally at some point. Sam, it will definitely rally at some point. Now, when it's going to rally seems to be in question. I'm just suggesting, or I'm not suggesting. I mean, it's obvious the market is really compressed to the downside. Uh, the lower it goes, the worse your reward to risk, and the more compressed it gets, and the more likely it is that you get your face ripped off by being short. So, yeah, hey, Sam, now I know who you are. Good to see you. Okay, guys, it's 2:27 and here we are. Let's see. Let's take a look here. My I guess you saw my email, those of you that are in here. My internet went down. That's always fun on a day like today. And let's see here. Okay, here is the 5 minute chart. And it's amazing. It's over and over and over. Moving average drop, moving average drop, moving average drop. Now we're up against the moving average again. Now, this has been absolutely epically vertical. The next level to keep an eye on is right here. Here's your volume node to the upside. So maybe this thing is heading into here. Um, but this has been, it's been a classic waterfall decline, lower lows and lower highs. We had, the sharp rally here, but it held this pivot, traded briefly above the faster moving average, straight down. So, we broke this level early this morning before the market opened. And actually, if you're listening to this now, if you recall, I pointed this out in real time before it happened and why it was important. And here we are. Now, it's not surprising to see a rally here. Uh, but it won't be surprising to see this thing turn around on a dime either. Now, this area right here that I have highlighted, this is a volume node, and it should hold. If it doesn't hold, then your next area is going to be up here. Right in here. So now these are the areas back to the upside that you're looking for. I guarantee you, the people using Bookmap and all the option levels, that level is one of the Ramma Gamma Jamma option levels. For those of you that are listening in here, if you see there's a guy named Sam in the chat. Sam and I were brokers together in the mid 1980s. And Sam can testify to the fact that I was trading options frenetically with a computer on my desk in the mid 1980s. Right, Sam? Okay, guys, this is really interesting in here now because we're coming into the last 40 minutes of cash trade. We're near the lows. The market is obviously two sided. Uh, it's coiled up. It's been going net nowhere now for hours. So just be careful. Whether you're long, you're short, you're in between, be careful. Okay, it's 3:37, 23 minutes left in the cash session. Don't be surprised to see these lows tested. Uh, now, we're who knows, right? Uh, we're we're at an we're closer to an obvious pivot in the NDX than the SPX, but we know what drives this thing. So we're up into a major inflection point. If you want to short it here and be aggressive against this pivot high, that's a good reward to risk trade. Now it's sort of an iffy trade, but in terms of reward to risk, I mean, it's like, 10 to 1. But you don't want to let the market's making higher highs and higher lows. It's above the moving averages, et cetera. It's a down day. We're coming into the squirreliest part of the cash session. But we've seen this thing turn around on a dime many times. And again, if you choose to trade this, uh, you've got a great reward to risk. Actually, you've got a great reward to risk long or short here. This thing is going to scream higher, or it's going to turn around and test the lows. I really don't know which one. I'm flat. I've had plenty of trades today, and I'm not going to screw it up in the last 20 minutes here. Okay, it is 4 p.m. Let's look at some stuff. Let's see. Okay, we never got back up here. Very directional day. Let's look at the cash. Charts. All right, SPX top left. NDX top right. And Dow bottom left, Russell bottom right. Now, the Russell has closed in the abyss. It took out this ledge, gap down, a lot of conviction. So you would expect some follow through. I would expect some follow through. If this is a top of some relative significance, we should see immediate follow through in Globex and tomorrow. Hard stop. Now, we all know market condition we're in, which is panic buying. Anytime there's any semblance of a retracement, but just looking at the chart, the Dow is coming off of a 4-day panic buy. Now it's retraced half of that almost in less than 2 days. I will point out the SPX and NDX came right into levels identified in the report last night, and it's nothing special on my part. It's just auction market stuff. It's just obvious levels created by buying and selling. It's very consistent stuff. There's no magic to it. And we broke out of that 3-day balance area in the NDX. So today was one of these days where everything sort of came together. Sometimes, I'll have a strong opinion about what's going to happen when he gets blown out of the water in the first 30 minutes of trading. Today was not that day. The day pretty much unfolded as I expected. Now, again, as we head into Globex, I would look for some follow through we'll look for a down day tomorrow. Now, if we do retrace tomorrow, or in Globex, if we're going lower to any substantial degree, roughly the 50% retracement of today's cash session range should hold. That frankly, that would be a pretty deep retracement. That's about as, if it gets more than that, then it's one of these, you know, they're going to ramp it back up things. I don't think that's going to happen. I'm just saying what would begin to invalidate my idea about immediately lower prices tomorrow and maybe into early next week is if all the indices retrace more than 50% of today's cash session range. And I don't think they'll get to 50% if I'm right. We could absolutely positively gap down tomorrow. Which, if I'm right, that's more likely than the retracement back to the 50% level of today's decline in the cash markets. All right, I'll take a look at VIX tonight. I'll take a look at breadth and some other stuff. I'll have it all posted for you. You guys have a wonderful evening, and I will see you tomorrow morning at 9 o'clock.